Hello and good morning. Welcome to the morning download live stream. Let me just get my slides going, and we're going to talk about something. Let's see. Okay, and there's the overview of what we're doing. The title of this live stream is called "Bonds Are Failing You." Of course, this is not financial advice. I'm just some guy on the internet going through some data. So the data we're going to go through is comparing bonds to Bitcoin. Um, may seem like an unusual comparison, but bonds have had a very terrible 10 years, and Bitcoin has had a very amazing 10 years. I know a lot of people in the community, both on YouTube and in the newsletter at morningdownload.com, are not really into crypto, not really into Bitcoin. And it makes sense because of the crash that happens every few years, and it's been a very volatile asset, but has also been the best performing asset 11 out of the last 13 years, whereas bonds have not done so great, even in a very good economic environment, relatively good over the last couple of years. So we're going to talk about bonds and Bitcoin and why you should consider having some Bitcoin in your portfolio. There are several big banks like Fidelity, Goldman Sachs, and others who have recommended that you have a small portion of Bitcoin in your portfolio, which we've covered in the newsletter before. And you can get the newsletter for free every day at morningdownload.com, which is a combination of financial news and education. So let's talk about those returns. So this is the returns of three assets over the last 14 years when Bitcoin started. You can see that Bitcoin has done pretty well. It has averaged, this is the compounded annual growth rate, over 100% per year, which means it's doubling every year. Gold has had a really good last few years. Gold and Bitcoin are both seen as contrarian assets, or kind of apocalyptic assets, where you put your money in those assets in case everything else goes crazy, goes to hell. Then Bitcoin and gold tend to do well. Gold has done very well the last few years, and then the S&P has done well the last couple of years. On average, the S&P has done about 10 to 12%. So you can see over the time frame, Bitcoin has beat both gold and the S&P. And when you take into account inflation, then the S&P just barely keeps up with inflation. That might be a little bit different, a little bit higher if you're just looking at the tech stocks, which have outperformed the S&P the last few years. So I want to talk about a couple of ratios to keep in mind when you're looking at investments. That is the risk-adjusted return, or the Sharpe ratio. And we'll look at some stats there, but let's define what the Sharpe ratio is. The Sharpe ratio is a common term used by financial analysts. I used to be a financial analyst at Deutsche Bank on Wall Street, which is where I got my career start. The Sharpe ratio is a measure of an investment's risk-adjusted performance, calculated by comparing its return to that of a risk-free asset. And a risk-free asset is generally considered to be U.S. government bonds. So when you're looking at the return of an asset, if you're just looking at the straight return, it's not really comparing apples to apples, because if you're comparing something that is very conservative, like a bond or a treasury or cash, very conservative, versus a super risky investment, then the risky investment might have a much higher return or potential return, but you're taking on a lot of risk for that potential return. So the Sharpe ratio is measuring the risk-adjusted performance, trying to equalize those two different types of investments, just looking at trying to equalize it across the risk you're taking on. So if you look on the column on the left, you'll see the total return, year-to-date, absolute and risk-adjusted return. So this is year-to-date as of last year. So you can see that Bitcoin has had the best return, and then financial stocks, IT stocks, services stocks, utilities, the Russell 1000, S&P 500, which if you own an index fund, you're most likely invested in the S&P 500, et cetera. And then you can see gold down there, 23. Those are the returns. But then when you take the risk adjusted return, the Sharpe, as defined by the Sharpe ratio, you'll see that Bitcoin is actually number 3. So this may not compute for a lot of people that don't follow Bitcoin or don't know Bitcoin, that we hear that Bitcoin is volatile, which it is. And people conflate volatility with risk. Volatility and risk are not the same thing. Volatility means that it goes up and down a lot. Over the long run, it has been going up. The volatility is what gives assets their return. So the volatility gives Bitcoin its return. When you adjust it using the Sharpe ratio, you'll see that Bitcoin is actually just slightly more risky than the S&P 500 and gold, which generally is, as investors, we consider those to be fairly not really that risky, especially gold. The last few years, Bitcoin is in the range of that risk-adjusted return using the Sharpe ratio. So I wanted to share this data to kind of reframe how we might think about investments and about risk and about Bitcoin and whether or not it plays an appropriate part in our portfolio as a small part of our portfolio. I'm going the wrong way. So let's compare these ratios. When I compare gold, Bitcoin, and the S&P 500, you can see that the Sharpe ratio for gold is 2.25, and for Bitcoin 1.72, and for S&P 1.84. So the higher the Sharpe ratio, the better. The Sortino ratio is a little bit different. It's related to the Sharpe ratio, but it's taking into account the downside risk. So bonds have low Sharpe ratios. So a Sharpe ratio below 1 is generally considered suboptimal, and a Sortino ratio below 2 is considered less than ideal. So low ratio suggests that investment is either not generating enough excess returns above the risk-free rate. In other words, you're taking on more risk than you need to, and it's experiencing high volatility or high downside risk, or a combination of both. So if the Sharpe ratio is below 1, it's not great. So you can see here, those are all above 1. So that's good. And a Sortino ratio below 2 is considered less than ideal. So you can see actually the S&P 500, the Sortino ratio is. So let's take as an example the fixed income bond fund, Barclays U.S. Aggregate Bond Index over a 10-year period from 2007 2017. The Sharpe ratio is 0.32 and the Sortino ratio was 2.3. So not ideal, not great. Looking at bonds, I don't know how to hide myself, so I'll figure that out for next time. But you can see here that bonds over the last 5 years, this is the iShares 20-year Treasury bond ETF, is down 38%. So when we think of bonds, traditionally, we're just thinking bonds are the safe place. Bonds are the place where you park your money, especially if you're in retirement. I know a lot of you are or planning to be soon. The bonds are the safe haven. That's where you put your money to protect it. The bonds actually can go down quite significantly. As you can see here from this fund, it's down over the last 5 years, 38%. So think if you're thinking you want to comfortably retire, you want to put all your money in bonds because it's safe, you're down. If you put all your money in this fund, you're down 38% over the last 5 years. Which is not really what we think of. So let's compare gold versus Bitcoin. The gold ETF has been up until now the most popular ETF in the world, and this is the inflows, how much money is going into an ETF every year. You can see the black is gold. Years 1 to 6 just kind of gradually went up, 1 to 5 gradually went up, and then year 6 had a breakout. And Bitcoin, the ETF, has been around about 9 months, and it's surpassed the best years of the gold ETF. And why is that? It's because what we have just been talking about. By the way, this is inflation adjusted. It's what we've been talking about. Bitcoin is performing better over its inception around 14 years ago. So 14 or 16 years ago. And it has a low Sharpe ratio and a low Sortino ratio, even better than gold. And investors are are recognizing this, and especially corporations are recognizing this. A bunch of corporations announced today that they're adding Bitcoin to their treasury, that there are over 160 corporations worldwide that now have Bitcoin as part of their treasury. Yesterday, a group of investors urged Meta or Facebook to add Bitcoin to their treasury, to use part of their $79 billion to buy Bitcoin, because of all the things we're talking here. The risk-adjusted returns are just better. It's in the top 3 best investments that you can have. And crypto assets, including Bitcoin, especially Bitcoin, since Bitcoin makes up about half of all crypto assets, are growing faster than both the internet and mobile phones. So we're just starting to get to the point where crypto and Bitcoin are becoming more mainstream, are mass market. And this year and next year, there will be pivotal years. They're breaking out, especially with the new administration. They're breaking out, and they're already, before they have even gone mainstream, they're already growing faster than both mobile phones and the internet. These are the number of years it took. It took mobile phones to reach 300 million users, was 21 years. The internet took 15 years, and crypto took 12 years. In the US, there are about 50 million people who own crypto. So it's already very mainstream, even though if you look at the online chatter and the search trends on Google, not a lot of people are looking for crypto, looking for Bitcoin. And I would say, when I say crypto, I'm talking just the top few best assets. I'm not talking about 3,000 of them, just talking about the best few top assets, and especially Bitcoin. It's not mainstream yet, but it will be as people start to see these corporations that are doing so well because they added Bitcoin to the treasury. MicroStrategy was the top performing stock, even better than NVIDIA last year, because they started buying Bitcoin for the treasury, and now they have 450,000 Bitcoin in their treasury, and the stock is still performing fairly well. So let me know if this was interesting to you, what you want me to cover in the next video. Then leave a comment down below, or like this video if this information was helpful for you planning retirement, or if you're in retirement, if you have any questions, and what you think of the data and Bitcoin, and whether you think bonds should be the majority of your portfolio, or if Bitcoin can play a small part in your portfolio. Thanks for joining us, and I'll see you next time.